Welcome to Mortgage on My Mind, where we take the mystery out of mortgages and make dreams of home ownership a reality. I'm Natalie Salins, a top 1% mortgage broker with 20 years of experience, based right here in sunny Los Angeles. If you've ever wondered about pre-approvals, appraisals, or what loan product is right for you, don't worry, I've got Mortgage on My Mind, so you don't have to. Each week, I'll bring you expert advice, real-life stories, and insider tips to help you navigate California's competitive real estate market with confidence. Whether you're buying your first home, refinancing, or just curious about how it all works, this podcast is for you. So let's talk mortgages, demystify the process, and make your real estate goals a reality. Ready to get started? Let's dive in. Hey everybody, welcome to Mortgage on My Mind. This is Natalie Salins. And today we have your guest, Amanda Rawls. She is the founder of the Amanda Rawls team at Expert Home Lending, Inc. in Sacramento, California. She's an award-winning mortgage broker. She specializes in loan structuring and has done many CalHFA loans in the past to guide families through home ownership and refinancing. Alongside mentoring industry professionals, she has championed female entrepreneurs and community growth as an executive director at eWoman Network. So welcome, Amanda. It's so good to have you on.
Honored to be here.
I'm so excited to have a fellow loan officer on with me today. I think the content will be full and meaningful for our listeners for sure. Let's jump in and chat about this myth of down payment assistance and what it is and what it means and why people think it's this great thing and that they have to be a first-time home buyer, and being a first-time home buyer is going to mean so much to them and make such a difference on their application.
Yes, gosh, yes.
All the things that you and I know are like, not so much. It doesn't even matter if you're a first-time
no
home buyer.
disrespect, but
Yeah, no disrespect. Doesn't make any difference really, unless you are a very specialized group. So tell us a little bit about your past in the CalHFA world. Tell us what CalHFA means. What is CalHFA? And not necessarily dream, just standard CalHFA.
Understood. Yeah. CalHFA is a California Housing Finance Authority. It's an organization that gives down payment assistance to first-time home buyers. For the most part, with CalHFA's first-time home buyers. And what is a first-time home buyer? Right? Yeah. That you cannot own a home for 3 years. People don't understand that if they had a home 5 years ago and sold it, they are considered a first-time home buyer again, if they're looking for assistance. But that's what we're talking about. My specialty with that is 2011, 2012. I've been doing this for 30 years.
Okay, yeah.
I really saw a need to help people with money. Right? We were coming off of some pretty crazy times in 2010, 2011.
Certainly.
And I really want to get really in the trenches with a community program. And that is how I started with CalHFA. Probably do one every couple of months, if that right now. Down payment assistance hasn't really been, because with CalHFA, people are realizing the rate might be a little bit better if they don't need the down payment assistance. So it's give them the options. But CalHFA is a great organization that they pull together private funds from individuals, and they have a certain amount for a certain period of time. And as they get sold, the money gets replaced. So great organization, truly.
Yeah. And CalHFA has an income limit.
Yes, ma'am. They sure, depending upon the county that you're in. Yep. Income and credit score requirement.
So we have to keep in mind when it comes to this down payment assistance, structuring it and making it work for certain clients, especially here in LA, where to even purchase a property, you have to make a certain amount of money. And most of my LA buyers, regardless of being a first-time home buyer or being eligible for this quote grant or down payment assistance, it's not going to work for them unless they stay under, let's say, like 700,000. So like a condo.
I was going to say, and then you got the HOA fees, you got all kinds of things, right?
All kinds of things. And the condo is a kind of a good way to shift into a CalHFA, because CalHFA doesn't hit
on the rate on a condo, right? So
Yeah.
condo rates, if you're putting very little down, tend to be much higher than standard single family rates. And CalHFA has just a rate, a flat rate. So a lot of the times you are getting lower rate if you're going CalHFA on a condo, which is
Right.
the only thing you can afford here in LA anyway. Now, go for it.
I was just going to say, you brought up something that I didn't address, is that this money is not free.
Correct.
That's the thing with CalHFA, that by the time people walk away, they have an over encumbered home. If they're
Right.
getting down payment, closing costs, and for the down payment and the closing costs. So they end up owing more on the home than they bought it for. And then they'll call me a year or two later, want to refi because rates have dropped. I'm like, oh, sorry.
There's no equity.
No equity. So yeah.
But also they have a second loan now.
Yes.
And do you, on your CalHFAs, because each lender is a little bit different in this way, what do you charge to finance a CalHFA? For us, it's 1.5.
Oh, it's 2 on the front for us.
Oh, it's
on the
2
broker
on the
side.
front for you? So we fought like hell on it. So it's 1.5 for us.
Good for you guys. And you know what? Being a direct lender, this is part of it. And this is, you're a direct lender, I'm a broker. That's one of the benefits of being a direct lender, right? Let's just real talk.
Yeah,
And
totally.
This is good.
Totally.
People don't know the differences between the two. We all have our great things, right?
Totally.
Yeah, no,
there's no grass is greener. Everybody has their pros and cons.
Absolutely, babe.
It's the mortgage business. That's what it is.
Yes, yes. But for you guys, it's cheaper. And when I'm talking to them and you need down payment assistance for closing costs and the down payment, I'm using up the closing cost credit, right? With my costs. They start coming in with things.
That's what I end up telling people. Okay, so they're going to give you 3% because the interest rate to get the down payment plus closing costs, which is 3 plus 2 is 5%. The interest rate is so high to get the 5% second. And you're like, that actually doesn't make sense at all. Just go FHA. But the 3% also doesn't make a ton of sense because if I'm charging you 1.5, then you're only getting 1.5 back. Yeah. But you're still encumbering the home with a 3% second. And so is it really worth it to only receive 1.5%? It depends how desperate the people are for the money. How much do you need that 1.5% now, understanding that later you're paying double for it?
Totally. And that's what makes us different, right? Is that we educate in that. It's not right now for us, right? Here's what you want. Sure, I can accommodate that, but can we talk about short-term and long-term and what that looks like for you? And they need to know that. And it doesn't always happen with some loan officers out there, right? They're just churn and burn. So that's what makes us different.
Yeah, I've been in it too long. The most important thing is that you're getting into something financially sensible. And if it just doesn't make sense financially. So when people come to me and they're like, I want down payment assistance. I want down payment assistance. What do you offer? We all offer the same things. GSFA, CalHFA, different types of FHA loans, which is certainly not for first-time home buyers. But on GSFA, so everybody listening, GSFA is Golden State Financing. And they have some really cool programs too. They've got like 100 programs. It's hard to even decipher what you're looking at because they've got like Platinum Select, and each one offers different things for different people. So you can, if you are a county worker, they'll give it to you as a grant and a legit grant to where you're paying nothing on the second and it's forgivable. That is not available in Los Angeles County. That program. It's not. So if you actually look at the program and where San Bernardino, Riverside, all different counties, the program for county workers to actually truly receive a granted forgivable second, that's the one program not available in LA.
And it's probably one of the best. I feel it's one of the best. Because they're forgivable, right?
Because it's forgivable. It's a real grant. Yes. But how much is a state going to actually give us free money? Because that's free money, right?
Yeah, you're right. Babe.
So very little. They limit it. They really limit it. And the rates on GSFA are not quite as good as CalHFA.
No, they aren't. They aren't. Yeah. I mean, and I'll tell you, when I'm sitting with somebody, and that's the first thing, and I'll say, okay, so what do you have for down payment? What does it look like? And they'll say, I have X, but I was really wanting to look at down payment assistance. The first thing I'm doing is talking about exactly what we're talking about, right? To the point where, is there anybody like 401k, like just looking at other options so they can possibly get a better payment and less encumbering, right? Own the home with equity when they walk away.
Exactly, exactly. And that's where, so GSFA has not so bad. If you really come to the table with zero money, then you can get like a second loan. So they'll give you money up front, but it's a loan that they're giving you.
Yeah. Yeah.
And then we're still charging that 1.5% just to close it. That's the origination fee. So,
and possibly a higher rate for the most part. All of
Right.
those, all of them are higher than what a traditional FHA or conventional.
exactly. And then you're not getting near the rate as an FHA loan. And
I've had people sit back and say, I've got a bonus coming. I think it would be better. The savings across the board, payment wise, was better. And they understood. And I think, again, that's just a blessing that we do to educate and inform now and later, because we're with them the whole way, serving hearts, right? One home loan at a time. It's like,
yeah, so true. For FHA, for us, we have this thing called Boost, which is FHA 100% financing.
oh,
And so because that's the other thing with like the CalHFAs and the GSFAs,
yeah.
they have credit limits.
Yes.
You have to have a FICO score of 680 and above.
Right.
So most of the time, people who have zero down payment also normally don't have a good credit score because they're having problems saving money, right? So
Right.
that
No judgment. That just is what it is.
No judgment at all.
Yes.
It's easy
Yeah.
to miss a payment if you're having problems saving money, right? So FHA, which allows our 0% down program, you have to have a credit of 600 and above.
That's it.
That's it.
That is amazing.
We give the 3.5% as a loan. So it's 100% financing. It's 2 loans. Yeah. So it's a great option.
Yes.
Instead of these but because the down payment assistance programs, again, they're just so tough with the origination fee and
yeah. And I don't know process wise too here, right? We underwrite them as we broker to a lender, but then they have to go to CalHFA for another day or two. It's not a quick process.
Of course. Yeah. And so let's talk about that. So that's the county assistance programs. A lot of people come to me with what we call LIPA and MIPA. I don't know if you have something similar up there. So it's low income assistance and then moderate income program assistance.
Yeah.
And we have that in LA. And I used to be certified. You have to get certified every year for it. And this program is very interesting. They will actually give $30,000 to $60,000 in forgivable grant money to the borrowers who are first-time home buyers.
Really?
And legit first time. You can't be 3 years out kind of thing. It's a legit first-time home buyer.
That's beautiful. And it's more county? It's a county program?
It's in LA County. So a lot of it, but again, impossible. So the low income is the one that's always available because you have to make 80,000 or less.
Okay.
Which in LA literally means you're buying something 400,000 or less.
Is that even possible?
Maybe a small condo. The moderate income, that MIPA, we call it, the moderate income sells out within a month. It's gone. You can't even get in. The funds are never available. I've never seen the funds available on that program. And that doesn't even go up to that much. I think it's on 10 or something. So you can still purchase, but it's different and they give you a little bit less in monies up front. But it is a forgivable grant. It's quite a beautiful program if you can get in. Here's the main problem. You need a minimum of like 7 weeks to close.
Totally. Yes, we do have one. I'm in Elk Grove. Same thing.
Okay.
Yep.
You have something like it?
Yep. Yep. But it's 20% down and the income, 45,000. I'm like, how the hell honestly,
It's the same. You guys have the same.
Yes.
It's impossible. And even
Impossible.
if you do find that gem and they finally find the property that works for them and the income works and the ratios work. So once we are clear to close, we have to ship the package to the county. They
Yep.
take 3 weeks to review it. And then they can come back and say, which has happened to me, we don't like the appraisal. And you're like, whoa, we're 6 weeks in. And it's awful. So you can't trust it. I call it a deal killer because 6 weeks in to then tell us that they don't like the appraisal, it means I can't have a contingency. So you can't have like 10-day or 17-day contingency.
Oh yeah, no.
Not at all, because
months.
It's not me approving the file. It's the county approving the file 6 to 7 weeks later. We have to wait for them to give the approval. So it's not a good process. It's like so many people want to do that. And you're like, it's just not possible.
At that time, it's like, you have a 401k. Is possibly there's somebody to borrow from. We have to also gauge emotion, right? I mean,
yes.
By the time they're down 6 weeks, and what if the county says no?
How do you write an offer like that?
And they paid an appraisal.
Yes, of course. And all their inspections, of course.
Oh my gosh. Yeah, no. Yeah. That just stresses me out. I'm like, if I can't promise come through, right?
No, I know and what kind of seller would accept that? The property would have to be on the market for months and nobody else is behind them. So
let's talk about that.
Right.
Let's talk about that. People with down payment assistance putting in offers.
So true.
And I also gauge that as well. You're probably going to be putting out a lot of offers and you may not ever get one accepted. Sellers want to sell. If no skin in the game and they know that these things take time, no judgment but from me, but they may have some. If they've got a quick close, somebody that'll do it that has money and going to get passed up quite often. Exactly. And I've had clients, babe, that have been out for a year, maybe 6 months. I might be exaggerating, but for a while and end up, nope, stop. I'm going to wait. I'm going to get some money and I'm going to make it happen. And they've done that.
Yeah. I love what you said earlier about shifting the idea of where you're getting the second from. So if you have a 401k and you are a first-time home buyer, call up your 401k, call up that retirement plan, find out what your withdrawal terms are, figure out a way to use that as your second.
Borrow from yourself.
Borrow from yourself, right? That's what it's there for. They allow you to take, but for our listeners, they allow you to take, in most cases, up to 50% or 50,000, whichever is less, for the purchase on your first home.
Unless it's PERS.
Yeah, no, of course.
I'm in the state. I'm right in SAC, so it's oh my gosh.
Oh,
I'm
sure.
sorry.
Yeah, totally. Yeah, that's unfortunate. You always call to find out what your withdrawal terms are, of course. But in most cases on standard IRAs or 401ks, you can take the money, borrow it against yourself.
Yes. And I'm coming across a lot of family members that want to help these days. Truly.
Yeah.
I mean, and they may not have the cash right there, but getting HELOCs, it's possible. A parent can borrow money. If they're the giftor, they can still borrow to give it to our buyers. And people don't realize that, right? There's options. There's other options as might be if somebody has that availability
to them.
Yeah.
It's a tough thing to ask a parent to take out debt.
Totally.
You would be responsible to pay it, of course.
Yeah.
But if it's not if it's not much, then it doesn't matter. And sometimes, again, on these programs, so Fannie, for everybody out there, as a standard conventional loan, if you are a first-time home buyer, again, you only need to have not bought within the past 3 years, you can do 3% down. 3% down on most things is not terribly difficult to get. And then the MI doesn't have to be as bad as some of those programs are, like all of that.
Totally. At the end of the day, we're not in front of numbers, but it's a good savings. It's a great savings. And maybe it'll take a little bit of time, but I do have one right now where truly they were like, my parents are going to be moving next year, right? And they want to give me money. We never know where these blessings can come from, right?
For sure.
And
Yeah.
I had to talk to them about how I could help. And again, this is not, you never want somebody to go into debt for another debt. It's not it. But if there's a temporary time frame and parents do want to help, there's options. There's options.
For sure.
That we
When
can help them.
people come to me, and it's a lot happening in LA, where they need a bridge loan, which is like the worst loan. It's so expensive.
So bad.
It's so bad. I've done
So
like two.
bad.
And it kills me every time I do it. I'm like, this is painful to watch you pay these fees. But when people come and they want to be able to buy before selling, and they don't have the equity out of their home yet, and they want a bridge, or they want a HELOC, or they wanted this, and they're trying to borrow, right? The first thing I say is, can you get a gift from your parents or someone? Can we get a gift for the down payment on the new home? And then when you sell the home, you'll just pay them back. That is the easiest way for us to get this down payment. People don't think to ask, but it's temporary, right? You need this 200 grand for 3 months until you sell, and then you can pay them back. But if we want to like structure this the easiest, cheapest way, because it's going to get so expensive, then that's the best way to do it.
You're so right, Natalie. That is so true. I always try to, again, there's time and a place. I'm not going to try to tell people what to do, right? I'm here to serve, but educating and giving that information on those bridge loans, it's not the best option. Good call. Those,
Yeah, exactly. Oh my God, bridge loans. That's another conversation we can have.
It is.
It's a whole other podcast.
Yes.
Totally. Anyway, this was so great. Thank you so much for joining and chit-chatting. I had such a good time talking about it.
Me too. Love it. Love it. Keep shining. It's been great.
You too. Yes. Thank you, everybody, for listening. You can find Amanda at all of the socials, and her information is below, of course. She's obviously an extremely seasoned loan officer. It sounds like you would be in great hands, of course.
And you too.
Thanks. Yeah. And stay tuned for the next one. Thank you.
Thanks for listening to Mortgage on My Mind. If you're ready to start your mortgage journey or have any questions, I'd love to help. With 20 years of experience, I make the process as simple and stress-free as possible. Check the show notes for my contact info, and don't forget to subscribe, leave a review, and share this podcast. Until next time, I'm Natalie Salins, here to help make your real estate dreams a reality.